Government bonds. Are they actually as boring as they sound, or a great deal to seal? A tradable security issued by the government is known as government security or GSEC. These could be in the form of Treasury bills, having a short time maturity of less than a year, or government bonds, having a long-term maturity of more than a year. A bond is a financial, debt, instrument that represents a loan taken by either a corporate body or the government from an individual. The bond is issued for a definite period of time, usually long-term, and interest, also called as coupon rate, is paid on regular intervals. Government bonds, also known as sovereign bonds, are debt securities issued by a government to raise capital. Think of it as a loan where you, as an investor, lend money to the government in exchange for periodic interest payments and the return of the bond's face value at maturity. Who are the major players in the government bonds market? Prime players include commercial banks, primary dealers, and institutional investors. Other participants in the government bonds market are regional rural banks, cooperative banks, mutual funds, pension and provident funds. Foreign portfolio investors, FPI, are also allowed to invest in the government bonds market, but within the quantitative limits prescribed from time to time. Corporates also buy and sell the G-bonds to manage their overall portfolio. Various types of government bonds. 1. Fixed-rate bonds. As the name suggests, the coupon rate on these bonds are fixed for the entire tenure of the bond. For instance, if a bond with a coupon rate of 10% is issued for 10 years, semi-annual interest of 5% will be paid till the bond matures. Most of the government bonds issued in India are fixed-rate bonds. 2. Floating-rate bonds. Unlike fixed-rate bonds, floating-rate bonds are sensitive to the fluctuations in the market prices of bonds. The coupon rate is adjusted at pre-announced intervals, which are either yearly or half-yearly. There is another type of floating-rate bonds in which the coupon consists of a base rate plus a fixed spread, which is determined by means of an auction. 3. Inflation-indexed bonds. This is a special type of bond issued by the Government of India to protect the investors against inflation. Both principal amount and coupon rate are adjusted with a price index. The index used could be the Wholesale Price Index, WPI, or Consumer Price Index, CPI. Inflation-indexed bond linked to Wholesale Price Index was issued by RBI on behalf of the Government of India in June 2013. 4. Capital-indexed bonds. This is a type of inflation-indexed bond. Here, only the principal amount of the bond is revised by adjusting to an accepted inflation index. Capital index bonds are usually issued for longer periods. The first capital indexed bond holding a maturity period of 5 years was issued in December 1997. 5. Special securities. Special securities are issued by the government to companies like fertilizer companies, FCI, oil marketing companies, etc., as compensation instead of cash subsidies. These securities usually are long-dated securities having a higher coupon compared to other similar securities. For raising funds, the companies are free to sell these securities in the secondary market. 6. Bonds with called put option. In this type of bond, there is an option for put only, call only, or both. Here, the investor would have an option to sell the bond, put option, and/or the issuer of the bond is given the option to buy back, call option, during the tenure of the bond. However, this option can be exercised only after the completion of 5 years from the date of issuance of the bond. 7. Strips. Strips expand to separate trading of registered interest and principal of securities. This is a special type of zero-coupon bond wherein a single bond is bifurcated into multiple securities. Each coupon cash flow is treated as a separate strip, and the principal payment is also considered as a strip. These are eventually traded in the secondary market. These strips are created out of existing bonds only. 8. Sovereign gold bonds. The price of this type of bond is linked to the commodity price of gold. The bonds are denominated in units of 1 gram of gold and multiples thereof. This bond may be held by an Indian resident, a trust, HUFs, charitable institution, and university. The bonds are repayable only on the expiration of 8 years from the date of issue of the bonds. The interest rate on such bonds is fixed at 2.5% p. on the nominal value of the bond. 9. 7.75% savings, taxable bonds, 2018. 7.75% savings, taxable, bonds 2018 were issued by the Government of India with effect from the 10th of January, 2018. The interest earned by the investor on these bonds attract income tax, but do not attract wealth tax. These bonds are issued only at par, for the face value of 1,000 rupees and multiples thereof. 10. State development loans. State governments issue bonds in the form of state development loans. These are also issued through an auction process. The coupon is paid half-yearly and principal paid at maturity. And there you have it, folks. A brief overview of what government bonds are and who the major players in the government bonds market are. Whether you're a seasoned investor or just starting, understanding government bonds and their market dynamics is essential for making informed investment decisions. Thanks for watching, and don't forget to like, share, and subscribe for more insightful videos. Until next time, happy investing!